Hello, everybody. Welcome back to the Prospero.ai stock market live streams. What a week in the markets, everybody. Wow, what volatility we are having here. You wouldn't quite know what's going on with some stocks by just looking at the QQQ and SPY here today, although they are making some upward moves as we are reading the stream right now. But it has been a bloodbath for some areas of the market, and we'll get into a lot of them throughout the stream here today. I see JC is in the chat saying, hi all, Wednesday, a bloody Wednesday. Yes, we are seeing some wild moves in the markets. Be sure, as we're beginning here, to like up the stream, everybody. Sorry for being a broken record, but likes are good for the algorithms, and I appreciate it so much. So let's get into the topics that we will be getting into in detail throughout the stream today. As always, if you guys have any questions about single stocks, anything macro, micro, business, AI, tech, whatever it is, let us know in the comments and we will get into them. But yes, so JC, the first thing I have written down as a topic is market crashing. So it's very odd to see the QQQ and SPY. Like I said in the beginning, SPY is now down just 0.25% here. QQQ is down about 1.5%. But year to date, the QQQ is down less than 1%, and the SPY is in the green, which you would hardly believe if you looked at some of these high growth areas of the market. Even like fintech has been really bad, nuclear bad, and a lot of AI tech high growth areas doing very poorly here. We will get into one stock that is actually bucking the trend and up quite a bit today, and that is Enphase, and it will lead me into a debate of whether we should be focusing on nuclear, which we've talked so much about on the streams, or if solar is going to come back into the forefront here. Let me take a look at how Enphase is doing right now, up 36% right now on the day. So we'll get into a little bit of a solar versus nuclear. Where do you want to be? Do you want to be buying the dip in these nuclear stocks that have pulled back? The OCLOs, the LEUs, the SMRs, NNEs, and I think we even like UUUU and all of those, or do you want to be looking to go somewhere where it looks like the momentum could be just beginning in solar? I see Tim is in the stream. What's up, Tim? Welcome to the stream today. Good to see you. We will also be discussing on the stream. A lot of the themes today are just going over the sectors that have done pretty bad recently. So one of them is software stocks, which just have done really terrible here in early 2026. Trade Desk, we've been covering how bad that's been. Adobe, even the mega caps like Microsoft has not been great. All of these software names are struggling here in 2026. AppLovin, I believe I saw, is down today. Let me check AppLovin now. Quite a bit. Yes, down 15%. So what's going on with software? Time to buy the dip there. Is it the AI effect? Are we actually starting to see AI maybe eat into these companies and their businesses a little bit? Or is the market just projecting that to begin happening very soon? What's going on in that space? We have a tale of two tapes for two pharmaceutical companies. We have Eli Lilly up today after having good earnings, and we have Novo Nordisk down today after lowering their outlook and not impressing at earnings. So we have two opposite ends of the spectrum going on for those two companies, although they seem to have very similar growth stories with the whole weight loss area of the pharmaceutical industry that they cover. So which one would you go to now in the Prospero signals at least? And yeah, can we see either one of them catch up with the other? Are we going to see Eli Lilly kind of pull back after raising, or are we going to see Novo Nordisk a little bit of buying the dip there? Then we'll get into AMD, which we covered before their earnings on Monday, and they have reported now, and the market is not quite liking what it heard from AMD. They are now down 16%. Dividend degenerates. What's up? Welcome to the stream. Perfect timing for your comment too. Yes, I was just starting to discuss AMD down 16% on the day, pulling back to that psychological level of basically $200 per share. So yes, we will get into what's going on with them and maybe why they pulled back so much and if they're still interesting after this pullback. NW said my Smith & Wesson stock is up 5% from last week when I came off hoping for a civil war. That's funny. Well, I guess it's not too funny. Maybe it means you were right, but yeah. Good that you have at least one stock that's doing well in this market. But Chipotle and worse earnings and is up. Chipotle is up right now? I thought they were down like 10%. Oh my gosh, Chipotle is up. Wow, they clawed back to the green throughout the day. They're now up 2%. We even posted on the Prospero Twitter this morning that they were down 10%. Interesting to see some buy the dipping going on there throughout the day today. I didn't check their earnings, but yeah, it looks like an initial disappointment, but then we're able to rally. Palantir as well. We can get into them also. It's just so many names being so volatile today, right? I mean, the list could just go on and on and on and on of names that are making huge moves. I wanted to bring up the fintech names, and I feel like that's been one of the worst areas. And you have Robinhood declining a lot today. You could kind of, I guess, put crypto in that bucket of like finance, fintech type of stuff. I mean, Bitcoin's been terrible. Um, SoFi's been terrible. PayPal, which we've been covering on the streams, which has been terrible for years. And just when you think, oh, maybe there's too much value in the name for it to decline again, oh, don't speak so fast. It declined about 20%. So I'm wondering, is there anything like what is causing and driving such huge negative moves in a lot of these sectors? Like, it seems like the way the volatility is crescendoing this week, like there's something happening that I can't quite put my finger on. I don't know if anybody has any ideas or theories about what could be causing, this level of volatility to erupt this week. Um, Obviously it like I've been saying, it's an interesting thing because with all the volatility and all these names, the markets aren't moving so much, and that would probably be due to you have Apple up 2% on the day, Microsoft is up. So there are some things still working, and the mega caps are kind of holding the indices together here for the time being. And Nick said all my shorts are going up and all my longs down. Yeah, it's that type of day, right? We do have more mega cap earnings this week too. We have Google. I think Google, pretty sure they're after the market today, and Amazon tomorrow. Yeah, we have Google today and Amazon is tomorrow. Yeah, so we'll get more insights to see how the mega caps are doing. Dividend said, I have no idea what's happening, but good for selling options. Yes, the VIX is spiking, so the volatility premium is increasing. The VIX went over 20 for a brief moment today, now dropping back down. Let's see, are we having a little bit of a bullish close here today? We are kind of trying to make a move towards the green. The SPY is, like I was saying, a 0.25% down now. The Dow is even in the green. And is the Dow now the leader year to date? No, the Russell is still the year to date leader, with the QQQ in last in terms of performance. NW said Prospero actually helped me make money on PayPal last year. Followed signals, much appreciated. You are welcome. Um, Avnish is asking bullish or bearish on ES. ES. Let's look it up in the Prospero app. ES, Eversource Energy. I would say, based on looking at these Prospero signals, not great. You have a downside greater than upside in the app, which is never a good thing if you're looking to be bullish on a stock. You have downside at 67 right now, upside at 40, so not looking great there. Um, Indice. What is the Indice ES? I am not sure. Um, anyway, I'll move on to some of our other topics that we have for today. We just have a few more questions that came from the Discord. Um, One of them was about Spotify, which was dropping more today and has pulled back quite a bit. Its chart looks very similar to Netflix at this point, and I believe this one came from Nick, and it's down over 6% here on the day, and down 24% year to date, quite a bit off its highs. Earnings coming up next week. They're kind of one of those companies that has a pretty nice moat within that music space. They seem to be the go-to listening app for a lot of people. Is it time to be buying the dip on them? Nick, I agree. I'm quite a stingy person myself, and I actually pay for Spotify Premium, and I love them and use them every day. Kind of like you said in your comment on our Discord. So uh, interesting company, especially dropping. And I really liked how you phrased your question of, buying the falling knife and what George looks for in terms of that stuff. So we'll get into that today on the stream. And then we have a question about the trade alerts, which has been in the Discord for a bit. We've been not getting to it, so I'm really going to try to focus on getting it today for JC. And I believe, if I'm not mistaken, the trade alerts are either live in the app today or just about to go live. I'm pretty sure almost everything is set up for them to start either today or very, very soon. So we can get more into the trade alerts, how George is going to be using them in his own investing, um, for pick diversity, duration of holding, frequency of position changing, all that good stuff for the investing and trading letters. First alert went out just a bit ago, so there you go. It is live in the app, so that is great. I know a lot of people have been looking forward to getting the alerts in the app that were investors in the crowd fund on Republic. So great that they are finally live and are going to be a daily thing for you all coming in the Prospero app. If you're confused about the alerts at all, we're working on an email right now that will be going out probably later today that will explain some things about it. So look for that in your inbox if you're expecting to get an access to the alerts. Alrighty, everybody, I'm just going to look around the market right now. Actually, we should check out QQQ and SPY net option sentiment as well in the Prospero app. And then we'll get into topics in just a moment here. We are seeing, no surprise, SPY at 0 in net option sentiment right now. QQQ is at 5. And I feel like there's been less volatility in the net option sentiments, of course, for the SPY, which has been at pinned at 0 for basically all of January, now all of February. QQQ, though, was bouncing around a bit more, I feel like, in the end of 2025. And now it's been kind of steadily low. Its highest in the time series graph was 18 on January 20 or 17 on January 27th, but not a huge range. Back and forth between there and like 3, 4 as the low. So kind of bouncing low as well. Take a look across the markets now. I know I've been mentioning a lot of things are moving huge. One of those sectors is nuclear. I think I saw Oklo was down quite a bit, trying to make a comeback here towards the end of the day. Hello, George. Welcome to the stream. Hello and goodbye, I guess. He'll be back in a second. Don't worry, guys. Oklo down 13% now. SMR down 10. LEU down 10. ASTS, another Prospero pick of the year, it's been holding up a lot better than some of the other areas of the market, but down today. So maybe we'll chat about that as well. Hey, welcome back, George. Long time no see.
Hello. I don't know what happened that first time.
So yeah, everybody, if you didn't hear me say in the beginning, we will be getting into these topics in detail, but feel free to share comments throughout the stream today if you want to hear any stock specifically brought up on the stream. I know a lot of stocks are moving huge here, which is where we should start off, George, because the indices are trying to make a push towards the green as we close here today. But what a week in the markets, especially for single stocks and specifically high growth stocks. Pretty much decimated here throughout the week. We'll get into a few of them. But the indices, not quite, I feel like not quite as bad still as you'd expect looking at some of these single stocks. How are you managing this week? And can you put your finger on anything that would make these stocks become so volatile this week? They're crescendoing in a way where you'd think there's like a bigger event going on, but I feel like it's tough to put your finger on it. So any ideas for that?
The best thing that I can think of is, I think, especially because the only news today was the jobs report, right? And jobs are getting to be in a pretty bad situation. The worst, I think, since COVID. I should look that up. Yeah, 15-year low excluding COVID. Right? So we don't have a COVID-like event. I think, if you look at growth stocks, I think I think we're starting to get some apprehension at the high valuations is what, that's how I read this situation, right? And what I mean specifically is it might be institutions trying to get out in front of the problem of layoffs, creating more, worry, consumer spending concerns, markets are all-time highs. I think, we're seeing some of that. And then, I also just think there's a lot of, like we talked about, geopolitical drama, like a lot of tension in the country. I think that, even if people aren't selling their stocks much, I think institutions are pretty apprehensive right now. And there's a lot of, like we've been talking about, uncertainty, hedging in the markets. And so, maybe some of those hedges have turned into more, downward bets. I mean, the thing that I wish I had acted on more, I mean, we've had a good week considering a lot of the longs that we normally cover are having horrible weeks. I think we really positioned ourselves a little differently, especially yesterday. I did a little switching around of the portfolio, everything like that. But I will say that, one of the signals I think I should have taken more seriously on this live stream Monday, we were scrolling around stocks and we were just oh, Nvidia's low, MBIS is low. We went through all our tech names. So should I be sitting here, all that surprised that that tech is down on Wednesday? No. I mean, it was a bit of a weird week because there was a bit of a rebound yesterday. But yeah, next time I see all of those tech names so low, I'm certainly going to react differently.
So jumping into some of the wild swings, earnings are triggering some stocks to move big here. I want to do a follow-up on the nuclear sector versus maybe an energy and a sector of energy in solar that could be stealing some of that momentum, because we have Enphase up huge off their earnings, up 36% about last time we checked. And this is, on the contrary to the nuclear stocks, which are down 10+% today for a lot of them. What are you going to be looking to do with the nuclear? Are you going to be looking to buy the dip? I know that was one of the clearer forecasts in terms of anywhere in the market that you had in mind. So I would imagine as those stocks are going down, nothing is changing with your opinion or your thesis yet, but maybe it is. But you can let us know. So how are you feeling about the nuclear space versus solar as well?
I'm looking at two stocks at the right now to add before the end of the day. Intuit and LEU. LEU, if you look at its chart, it's really near its low. It's at if you look at the weekly chart, which I have been, it's bounced off around this level quite a few times since it took it. So I do think there's an opportunity to get in. Then I also look at Intuit, and Intuit's not a stock I particularly overall, but it was actually a stock that we were shorting last week, and then it's completely gone in the other direction on net option sentiment. It appeared on momentum, so that could be something where institutions are starting to see value. And in this market, I love that kind of thing. I might add both of them because they're a little asymmetric into it. And LEU, I think I'm talking myself into that a little bit. But I love asymmetric stuff, right? Intuit is up today, even though, a lot of the growth names are down. I think because people are starting to see value there, it's a good balance in the portfolio.
So we got a comment from Tim about TMC, the time and long-term perk like LEU and ASS, but underwater mining seems like that would be very complex in legislation because of climate change. It's a bit scarier than nuclear.
I don't know exactly what I think I said I liked. I think I said I liked TMC over, another similar stock because of it was closer to the low. I think that's what I said versus LEU. That's why I added it versus LEU, because it was closer to the low. Now LEU is, closer to kind of the bottom that we see it. But no, I mean, TMC is not about legislation. It's actually more about I think that is kind of the next frontier of mineral exploration, and we're going to really need that. There's a lot of rare earth minerals down there. I just think it's kind of an interesting long-term play, and one that people will continue to speculate on. That's kind of what I think of it. I don't look at it the same as LEU. Yeah, that's why I picked it. It's on my list of interesting growth stocks that I'm looking for the right entries on, and it just looked better on Friday.
Well, we got two growth stocks asked about in the chat before you got here. I want to make sure we bring them up in Palantir and AMD. Both stocks down now after earnings. Palantir initially a good reaction and now negative. AMD just immediate negative reaction. Either of those stocks piquing your interest now that they have pulled back?
No, not really. I actually actively do not like AMD close to its all-time high. I just think that, I think it's still pretty close. But it's I liked the AMD story when it was it's a discount versus NVIDIA, right? I liked that story. You were getting exposure to AI at a cheaper price. There was a growth story to it. When both are sitting, and we kind of did this earlier in the week, when both are sitting, at relatively similar, I think we said AMD was closer to its all-time high earlier in the week. I think you got to be crazy to buy AMD closer to its all-time high in this market than NVIDIA. It just doesn't make sense. Because you look at it and you're just well, AMD is a growth company. Well, NVIDIA is the growth company, right? It's still having crazy growth, and it still has a lot of advantages, right? If a company is growing more and has all these entrenched advantages, I just do not see the entrenched rationale unless, it has more to go, to its all-time high. There's some other value argument. And the one thing that's you always hear with AMD is the per token economics are better, blah, blah, blah. But to me, that's a lot less relevant until they're actually demonstrating that they can grow more than NVIDIA, right? Because if you're just well, it's it's the economics are there. It's just okay, well, that's relevant to me when they can start proving that they can grow faster than, the larger company.
So another area of the market getting hit really hard, and this one was kind of even before this week, was software companies, but it has continued. We have AppLovin down today. We have Trade Desk hitting multi-year lows, so many more, Adobe, and the list goes on and on. Even Microsoft has been weak. I think a lot of the fear in this sector comes from the AI impact on, their future businesses. But at some point, you'd think that is going to be priced in, I'd imagine. And some of these companies are going to be able to adapt. So any of your latest thoughts on software? Is it starting to look interesting now that it's been continually weak? Is there going to be some kind of value floor for some of these stocks, or not yet?
Yeah, it's kind of hard. Part of me wants to get in on this software value thing, and I tinkered a little bit with Team and CRM and some other ones I was thinking about. But it's just complicated. It's very hard. I don't it's hard to know where the bottom is, and I'm always talking about I think I was talking about that play relative to some other plays recently. But the big thing is it's just we don't really know, for me to want to be there's value here, I have to get a good sense of what the value is. And I just don't think we have a good sense of, how much these businesses can shrink. And probably more importantly, what's the perception on how much the businesses can shrink. So I think it's really tough to be this is the good spot to buy. You could look at the charts, and I certainly if I saw kind of what I'm talking about with Intuit, right? If I see something where it's it looks to be bottoming out a little bit, and the signals look good, yeah, we will look for those opportunities.
I saw how bad Intuit stock was doing. That was surprising to see. My follow-up question for you is, I'd imagine these software companies, these are the giants of their respective industries. Aren't they going to be able to either, invest in the technology of the future themselves and bring it within their ecosystem, or just acquire companies that are starting to steal their business? Why are their stocks getting hit like they are going to be out of business soon versus just like adapting to the new technology and implementing it in their own?
Because there are startups in the space, but I don't think that's what the market is afraid of, right? I think the market is afraid of, you know, Google, Amazon, Microsoft eating everything else, right? Like, sure, they could acquire those companies, but you know who else could acquire those companies? Microsoft, Google, there's no, like, at the dawn of AI, there's no reason that these companies sitting on the, most advanced AI company couldn't, eat any, business that focuses on like automation efficiency, right? Like that's what a lot of these businesses are doing, automation efficiency. And like, yeah, it's a pretty like just to focus on one thing, right? Just to focus on like Jira, Atlassian, like their big product, right? I use it. I don't really like it. I use it here and there. It's all right. Like it can be unwieldy. A lot of the times you have to have people that really know how to use Jira do it, right? Like it's just a whole different world if you could have like agentic workflows, like coordinating that kind of thing, right? A lot of that is because coordination is difficult, right? But imagine a world where, agents are the go-betweens, agents are, providing status updates on what people are working on. Like, a lot of the time that's still a manual process. Like you go in and you fill in your ticket. What are you working on, right? But we're not too far away from a world where like agents are, reading your code and writing that for you. Because a lot of that is like, here's what I committed, these are the outstanding questions, all that. And yeah, we're not too far away from the world where that is a very different process. And I think, you'll always have like, and that kind of goes back to what we were just talking about with value, right? Where it's like those companies are going to get punished more than they should until we figure out, how they fit into that future, right? So there could be value at some point. And why I don't bet on these things is a lot of, the question of is there value is like, can they innovate, right? It's like we're talking about small companies, whatever. Like when you're talking about acquisitions, like I think betting on the smaller company getting the best acquisition is not a good bet, right? So it's not relevant there, right? So are you just like, does, Salesforce, Atlassian, and, any of these companies that are getting hit, right? Do you trust their ability to innovate and make new products, right? And large companies do have problems with innovation frequently. But if the answer is yes, if you know those companies well enough to be like, you know what, I don't think, I think Atlassian can figure out how to integrate agents into their product. And I believe in that. And that's a bet I want to make. It's not a bet I know enough to make myself. But that's how I look at it.
Yeah, it seems like there's just so much uncertainty. And when you say like we're not that far away from agents and all of that type of innovation you were just saying, is that months or years or what is that time frame you think?
It's the product question, right? Like it's the same thing we talk about with the self-driving cars, right? The technology is there. The question is like, well, it's different for self-driving cars where I'd say like the product there is legislation, right? Getting the legislation, dealing with like, the users are the politicians that they need to convince, the infrastructure that they need to build out and be able to do that. And they're making progress there. But where we are in AI is the technology is there to be useful. The question is like, how can you get people using it comfortable, whatever? Like I actually had an interesting, I run a poker game in New York for founders, and I run, throw with someone, mostly provide the event space. And we had a very interesting conversation about AI and using AI and like interfaces. And I was like, I've mentioned this before, where it's like for a long time, everyone was sure that you would need that the next interface was going to be a hologram, right? It goes back in the movies, even till like, maybe 5 years ago, like Apple was building something like that, I think, you're up on there, and like then all of a sudden, as this version of LLM AI has risen, like we're kind of realizing that do you even need an interface? Like, do you need to do all of that, tapping yourself? No. So like that changes the perspective. But where I'm going with this is like, I'm not even sure the next step is an interface. Some people like neural interface or whatever, but like in my mind, the next step might be, you know, an assistant that like, an AI assistant that wakes up, it's like, your mom texts. This is what you normally text her back. Should I send this text? Right. And you edit it and it's done. And you don't even have to touch a phone or anything like that. Emails, suggested emails. You can even authorize like, just be like, if this list of people, white list of people calls, or like if someone, mentions the word, like I'm an investor, or, something, and you go out and you qualify them as a lead. Right. And they, all of that stuff can be automated. It's like, yes, send my calendar there, like write this text, like, that kind of thing. That's the product we really want. And the funny thing, the biggest obstacle standing in the way of that product, I think, is the way the tech overlords have betrayed us, right? Because I'd be like, that's a really cool product. But if like, Google said like, okay, like, yeah, we can give you a trial of that product. Just send us like all your personal text, email, just give us access to your whole life. Like, I'd be like, I don't know about that, right? But mostly that's the chicken or the egg problem, right? If I knew 100% that I could have something that worked that well, and I also didn't have to like spend like, because a lot of these systems kind of exist, but you have to manually upload your data sets. There's like, there's a learning curve, you train it, and like, you don't know if that's worth it. If I could just say like, here, give me this access and I'm going to get something that smart, I'd sign up for it tomorrow. But that's the chicken or an egg problem, because like they need that data to make the product better. And like, I don't want to give that data until I know the product is better. And I think that that's an obstacle, and I don't know when to solve that. And like, I use the personal example, but it's the same thing B2B, right? Like, imagine in this agentic example of like Jira, like imagine if not only it was watching your work, but it knew when to tell people about where you were in the cycle, right? A sales team was automatically notified about like, okay, this product is actually like based on the coding trajectory of these people, this product is going to be out in a week, instead of you going to your technical team and being like, when's this going to be, when's this going to be out? Like, the efficiencies are staggering, but the question is, the biggest question is, how do you bridge that gap? And that's why it's such a hard question to answer. Because I don't know when, companies are going to be willing to say, here, like, I'm going to give you all that data so you can build me a product like this. Because obviously it needs that set to train on. But like, that's the kind of thing that like what I could see happening there, and why I always talk about like the like cloud providers. Like, I could see, Google or Microsoft or whatever rolling that out internally, using that to demo to other people, and then selling that. And that's why I always say that those companies are going to kill things like consulting, everything like that, because they have everything that they need to solve the problem. And most companies lack that, are not as big, so don't have the same way to train, and they lack the technology. So I think that's going to be the way it goes. And I bet if you ask this question to the CEOs of one of the cloud providers, they'd be able to give you a much more precise answer than me. They'd be able to, but they probably wouldn't.
We have Emmanuel in the chat saying he's tuning in from Tanzania, saying he wants to find the best stocks to buy. Please help. Well, Emmanuel, you were in the right spot, because we go over all of it on these streams twice per week. So please subscribe and keep tuning in. But we'll be chatting about a bunch of different stocks here. Another sector of the market that I wanted to jump into today, one of them that had been the driver in 2025,
Well,
and
wait,
especially
let's just not move past that. Welcome from Tanzania. The best stock to buy is a tough question, right? It really depends on what stocks you own already, your risk profile, a lot of things like that, right? But if you're in our Discord, join. Like I think the link gets posted here. Join, and I could be a little more. We could be a little more direct about how to answer that question because it's complicated, right? It's like the thing that like people that are learning to invest a lot of the times don't understand that well is there's most of the time the greater the reward, the greater the risk. What a good investor does, right, is they try to find something that has a relatively low risk to reward. But even in that bucket, there's a lot of different like examples of stocks that I could give that have a relatively low risk to reward, right? But it's just a question of, what your loss tolerance is, what else is in your portfolio, your total assets, like a lot of things like that. Because there's people that really, can't afford to lose anything, just be like, I really need this money. Where I would say like the best stock is probably an ETF that's going to perform within a certain band. Like as you start saying, there's other assets, I have some risk tolerance, things like that, then you could start moving into the higher reward, higher risk. But there's a big misconception around the idea that there's like a best stock to buy. A lot of people think of the best stock as the one that just could go up the most. But the one that can go up the most also has embedded in it a pretty big risk of going down. I shouldn't say pretty big risk of going down. I should say a pretty big risk of going down big. Because like obviously when you're measuring that risk reward properly, it has a higher probability of going up than down, but your losses could be significant if it does go down.
NW in the chat said he's met people that worked at Boeing that believe the Earth is flat. So I don't know if I want to be flying on Boeing planes after hearing this story.
Interesting.
Also, George has recommended paper trading. Schwab Thinkorswim is a good practice platform, said NW for Emmanuel. All right, so jumping into the fintech and finance sector of the markets, we've had Robinhood, SoFi, PayPal all pull back quite a bit this week. Similar theme to what a lot of stocks we've been talking about on the stream today. How are you feeling about that area of the market? I feel like PayPal is really interesting because it's been bad for years, and just when you think maybe there's too much value there, you get smacked in the face if you're a PayPal investor with a negative 20% on earnings day. But Robinhood had led our signals for a while and had really been one of the leaders in the markets, now pulling back quite a bit, almost 50% from all-time highs. So how are you feeling about fintech, finance? We could wrap crypto in this too if you want to touch on that a little bit.
Well, yeah, you can't talk about any of this without talking about crypto, right? Robinhood was, sailing during crypto and it's struggling when it's not. Like, I think the association, not only is the association very logical in terms of there's a lot of crypto assets on Robinhood, like there's a big overlap between the type of people that like crypto and that kind of risk and exposure and Robinhood. And I think, I think the market's reeling right now on like high risk assets. I mean, I think one of the things that is leading down the growth stocks is what's happening to crypto, right? Crypto has more leverage, right? A lot of that leverage is being called. That's what's putting it down. And I think, kind of logically, people are making that association, right? The same kind of people that are in crypto are probably in higher risk assets. And so those are going to be the ones that trigger first because a lot of the times things are more leveraged in crypto. So I think there's a perception that are saying like, oh, the same people that are that they're going to have, they're going to face, margin call issues with some of their high growth stuff next. Perhaps the crypto losses will trigger, margin calls on other high growth assets that they're playing. And all of that is bad for Robinhood, right? That's their customer base. Their customer base loses money. They have less AUM, maybe, and then they're perceived very differently. So I think it's a scary time.
You think Michael Saylor's having some restless nights these days? I saw he's now down 2 billion overall with the latest Bitcoin drop.
That's crazy.
So with that being said, these stocks have pulled back quite a bit, and like if you want to throw Coinbase in there, I saw even Webull, which was an IPO last year, is down a ton. Anything looking like it's dropped enough where you would be interested at nibbling if you're an investor and have maybe you wanted to be in Robinhood, but it would just kept going up, and like now you're thinking, oh, maybe it's an opportunity where I could just start a position?
Nah. Like, I feel the same way that, like, I was kind of looking at crypto today and being like, some of the things like, maybe I want to, look for a reentry on IRIN or like something like that. But, honestly, no, this thing has got to work. It's like it's a falling knife right now. I got to see this sort itself out a little more before I do anything about it.
Well, that's a perfect segue to one of our Discord questions, actually. It was from Nick, and he was bringing up another stock that has been dropping quite a bit, and that is Spotify, another one that has such a strong moat in its sector of like being the leading music streaming platform. But he was kind of asking about it. They have earnings next week, but also the fact that he actually used the same exact phrase, a falling knife at the moment. What do you look for in a stock before you're willing to kind of declare to yourself, okay, it's time to buy the dip? Especially if a stock is having, we always talk about the positive momentum, but really negative momentum, and it's spiraling at the moment. So thoughts on Spotify, and then falling knife stocks in general. Would you ever make a purchase in one of those?
I'd sooner short Spotify than go long, but I'm not really looking to do anything. It looks really, it's a 13 net option sentiment. No, I'm never really catching falling knives. Like, you hear me all the time. Like, I don't use a lot of charts, but what I will very often do, especially if I'm looking for value, there's really only two like setups that I look for. And this is kind of inverse long short. I look for a stock that just has like kind of overwhelming momentum, net option sentiment, upside, might be near its all-time high. I would prefer it if it wasn't, but if I like the business and it makes sense and there's long-term potential for it and it has enough momentum, I'm going to try to take a ride. Then there's stocks that look good in our signals that I see bottoming out on the technicals. Those are really the only two long setups. And then, short, it's like pretty similar. I'm looking for ones that are like topping out, that are looking lower in our signals. Or I'm looking for ones that are like, looking very bad in our signals that either look like they have distance to the all-time low or look like they have enough negative momentum in the signals that they're going to smash through their 52-week low.
Do you think that discipline and strategy is like it comes from just experience in the market? Because I feel like it's so tempting when, like, for example, 2025, there's a lot of stocks that had so much momentum. People were probably FOMOing or wanted to FOMO. Now you see them pull back 20, 25, 30, 40%, and you're like, oh, it's my opportunity. I got to get in. Before you actually confirm a bottom or like do any of that stuff, be patient, take any of the practices like you were saying. So is that from, you think, experience of like seeing the market go through these cycles time and time and time and time again?
I think I'm almost definitely leaving money on the table. But sometimes that's what you have to do. Like, there are a lot of setups, like, and this is what I always advise. There's a lot of setups that I could be making money on that I don't. But, for me, it's more important to stay in my comfort zone. And like, the more you look at the same type of setups and the same type of patterns, the better you're going to be at those type of patterns. And like, that's why, like, people all the time will see me like, just very quickly be like, this score isn't high enough, that one, like, because it's very easy once you have your process to just filter it down, make sure you're picking. Because like, a really good example is like, a lot of the times I'm saying, something like a 60 net option sentiment and upside, that's not high. That's not high enough for me. Right. And the big reason that, that I'd say that is, I'm looking in certain levels of the distribution. 60 is closer to the center of the distribution. Like, I'm just not as familiar if a stock goes from like 60 net option sentiment to 50 net option sentiment, how big of a deal that is, and like how to orient that around the chart patterns and everything like that. So it's not just that it's low, it's that I don't have a map for that type of trade. And the more I do the similar ones, the more my map gets, kind of more and more honed in.
So spinning to the pharmaceutical sector, two stocks reported and are moving in very opposite directions. We have Novo Nordisk down after actually pre-announcing negative guidance and then having earnings that didn't deliver what investors wanted. So they are down quite a bit, down over 5%, but even a bigger drop yesterday, about like 15%. But then you have Eli Lilly, which seemingly these two companies are very, very similar, up 10% and had great earnings. Both have the weight loss sector under grabs. Eli Lilly was one of those stocks that looked fantastic in the Prospero signals for a bit. Now over $1 trillion market cap, actually, I'm seeing. I also saw Walmart, by the way, everybody, just popped over $1 trillion too. So the Magnificent Seven is growing. It's expanding. It might be a Magnificent 12 pack pretty soon if companies keep on growing like this. But your thoughts on the pharmaceutical space? What differentiates Eli Lilly from Novo Nordisk? Is this just the management team, like being able to market and deliver? And is that what making one move one way and one the other? Because seemingly the products aren't so different.
I don't know enough to answer that question, to be honest. Like, I think that's a good thing for perplexity. I don't know enough about their products, right? I don't know if they're similar. Like, and then the other question is like, what's their R&D pipeline? That's one of the reasons I don't really like biotech unless like, we were in Eli Lilly when it was just like so good in our signals. But it's very hard to answer questions like that. I'm just not familiar enough with it.
Yeah, it's been staggering to see like Eli Lilly past year up 36% and now approaching all-time highs. NVO past year is down 41% and now almost back to 52-week lows. So very opposite moves for both of those stocks. NW in the chat. I would love to be able to see the signal graphs over a longer time period. That has probably been asked and answered before.
Yeah, I mean, we talk about that. We don't really want anyone to steal our data. And once we start putting that up, it's like easier to web crawl, like, mine the data, take the pictures, especially with generative AI and agents now. Like if we put up those long graphs, people could have like our whole historical data set in no time now, unfortunately. So it was true when we started that. And now it's even more true. So yeah, I don't think we're going to be, we've talked about it. We've talked about doing it on the web where we could like create more security, more, but it's like, yeah, it's difficult for that reason. We don't like, and, we don't want to do it. We don't want people like, front running your trades. Right.
Mm-hmm. Tim actually had a very similar comment about like, do you hold on to the archives of the signals forever, even if they're not public?
Yeah, of course.
So, interesting. So we can look back and maybe if people are just hearing you say like why you wouldn't want to share them, I think it's because the value of the signals gets diminished the more that like institutions.
Oh yeah, when I say front run trades, like all
Yeah.
like hedge funds could all come, they could pull historical stuff, and then they could act on the information that we publish before you all could.
And in the market, if like the alpha becomes distributed, it kind of gets eroded, right? Like then there's not really an advantage anymore if it's being traded upon.
Well, some of what we do is we're, making it about interpretability, so you can still interpret it. The problem is that just like all the algorithms would get the information before people. So you would always be behind the algorithms in what you were looking at.
And W said you already have enough people pretending to be you on Discord, LOL.
Exactly.
I think that's a major problem with the Discord platform. I notice there's so many bots that are impersonating. It's like, come on, Discord, Get some kind of security or something.
Yeah, I agree. Do something.
Actually, now that I haven't checked out Discord, they went public, didn't they? Or have they not gone public yet? They
I
were
don't
one of
know.
the IPOs. I guess they haven't gone public yet. I saw a lot of IPOs have been struggling that just went public last year. So I'm wondering, do you think if there's any IPOs that haven't gone public yet? I guess Discord is a good example of one. You think they're going to get delayed with how bad the growthier areas of the market have been recently?
Yeah, probably.
We have a few more topics. Are we going to do any kind of switch over today before the end of the stream?
No, and I don't really even have time. I got some things to do before market close.
Okay, so do we have any time at all? Or are we wrapping up right here?
We can do one more.
All right, where should we go? I want to get to JC's Discord question because he was just asking about now that the trade alerts are launching, how are you using them in your investing, your trading, your thought process around them? Just a little bit, how you'll be using them in your own investing.
It's a totally different system. Like I'm using the system, you know, how I use it. I use LLMs more and I combine them with my knowledge of the other stuff. I mean, um, the trade alerts operate completely in their own silo because I'm picking one thing a day, and that's very different than balancing a portfolio or whatever. I'm just looking at the market. You know, my biggest thing today, I was hoping to do it in the morning, but it was, you know, I was trying to figure out the market direction, and I maybe even waited a little too long. But yeah, I gotta go.
All righty, George. Thank you for joining us today. Thank you, everybody who tuned into the stream. Hopefully, you enjoyed it. Drop a like if you enjoyed the topics, and we will catch you again on Monday, back with our stream at 11 a.m. So, have a great rest of your week, everybody. I know it's been a red week, but you know, stay positive, everybody. Hopefully, these streams help you, and we will see you all again soon. Appreciate you all, and I'll see you on Monday, guys. Bye.